The rising effectiveness of artificial intelligence is lifting sales for many companies working in the ecosystem. ASML is one of those companies that provides manufacturing equipment for other companies like Taiwan Semiconductor, SK Hynix, Intel, Micron, and others that are producing these GPUs, these DRAM, storage, etc., all of these components that are going into not only electronic devices, but the data centers optimized for AI. So it's important for investors to consider the latest developments and what's going on with ASML.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So in its most recently completed quarter, the management team told investors that third quarter net sales came in at 7.5 billion euros, which was within their guidance. Not only does the company sell these high technology machines, these cutting edge machines, but they also provide maintenance and service on those installed base of machines that they have worldwide. So installed base management for the quarter came in at 2 billion with gross margin at 51.6%. Longer term, the company's management team reiterated its confidence that its gross profit margin will move closer to 60% and its revenue will continue increasing. Already, the company generates excellent profit margins with Q3 net income of 2.1 billion euros, representing 28.3% of net sales, which generates a net profit margin in the same number. Now, the big thing that most investors were looking for from ASML was their net bookings number, because the company takes time to take an order, manufacture, and deliver the product to customers. The bookings number gives investors guidance into what their revenue will look like in the upcoming quarters and upcoming years. It also gives an indication for end market demand for these leading edge manufacturing technologies. So Q3 net system bookings came in at 5.4 billion euros, which is better than what most analysts on Wall Street were expecting. This was split between 3.6 billion in EUV systems and 1.8 billion in non-EUV systems. The EUV systems are its most advanced technology and the category where ASML arguably has the strongest competitive advantage. So in a bit of capital structure news, the company did announce that it will have a new share buyback program that they will announce in January of 2026. Also in January of 2026, the management team said they will provide you with the full year 2026 guidance. So there's a lot of new information that will come out for ASML stock investors in January. That's something that you all forward to. Looking for the next quarter, they expect Q4 sales to be between 9.2 billion and 9.8 billion euros, or 9.5 billion at the midpoint. That would be a nice sequential increase from the third quarter, where the revenue was much lower than that. They expect Q4 installed base management sales to be around 2.1 billion, and the rest of that coming from product sales. Gross profit margin for Q4 expected to be at 52% at the midpoint. That too would be a sequential increase from the 51.6% they reported in the current quarter. By the way, this document I'm reading from is the company's most recently completed earnings call with Wall Street analysts. I've made this highlighted document available for my channel members, and you can join for less than $5 a month. And this is just one of the many benefits you get for being the channel member. And there are dozens and dozens of these already available, and I'm adding more regularly. So here's the news that all AI stock investors were looking to hear. And this is not specific to ASML, but it talks to the broader demand for artificial intelligence. The company saying that since they last provided investors with an update, which is roughly 3 months ago, there were a number of announcements around the continued investment in AI infrastructure that supports demand in both leading-edge logic and advanced DRAM. There was also positive momentum around AI, which seemed to extend to more customers in both logic and DRAM. So the demand for artificial intelligence is broadening out from a smaller set of businesses to a larger set of businesses that are now becoming more and more interested in artificial intelligence. So there's also more momentum around customers adopting EUV layers in both logic and DRAM. And that's good news for ASML because that increases the average selling price. And it's also good news for AI investors overall because it means more advanced technology is being invested. And that means technology improvement leads to more innovation, which creates more demand, and it kind of fuels that positive virtuous cycle because you get more productivity, and the increase in productivity gets enterprises more excited about investing in the technology, and that positive virtuous cycle could go on. But it wasn't all good news for ASML and ASML stock investors. They do expect to see China customer demand and therefore their total net sales in China to decline significantly in 2026 compared to their very strong business there in 2024 and 2025. So they're telling investors they saw outsized sales in 24 and 25, and they expect that to decline significantly in 2026. This could be many customers front loading their purchases of ASML products in China, fearful of inventory availability or restrictions, etc. And so they front loaded, they bought as much as they could get their hands on, and that's going to create a gap year in sales in China in 2026, probably extending beyond 2026 as well. But even though there's going to be significant decline in China, the overall business for ASML looks to be increasing next year compared to this year. Management team saying we do not expect 26 net sales to be below 25 net sales. In other words, they expect 2026 to have more sales than in 2025. So as I mentioned, they will also provide more details on their 2026 outlook in January. But they're excited about the progress they're making in helping drive down cost of technology on their customers' most advanced processes. So as a reminder, I wanted to share with you my proprietary discounted cash flow valuation model for ASML stock. I value this business, the calculation of fair value, at $693. The current market price is well above $1,000 at this point. Now, I had ASML stock rated as a buy all year long in 2025, so I'm happy to see the stock performing extremely well. This year, it's been one of my better recommendations. But yesterday, I downgraded ASML stock to a hold because of the rapid increase in share price and because of the valuation difference now, where I no longer see this stock as where coming into the year was closer to being fairly valued. It's now overvalued, in my opinion, according to my DCF calculation and when measuring on a forward price to earnings calculation. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.